Welcome back to the Boulder Business Podcast. I'm Paul Fontanelli. I'm the founder, CEO of Boulder Adventure Park. But on this podcast, we just talk about business, anything related to entrepreneurship, etc. Today, we have two awesome guests. We got Jake Jenkins and Lance Broadway.
At least one awesome guest.
There you go.
I'll take one.
Awesome. The fun thing about Jake is an investor in Boulder.
An accredited investor.
That's exactly right, which we will talk about. And then he's also in the process of kind of looking to raise some money for their own project that they're working on, which we'll talk a little bit about. And so the goal of today is let's just talk about raising money, which is a very interesting topic.
Yep, it is.
Tons of different ways that it can happen. Sure, throughout this, I'll talk a little bit about how we raise money for Boulder. But let's start first with, Jake, you reached out to me, so kind of catch us up.
Thanks for taking the time, and I know your time's valuable. And,
no, it's great.
But I've known you a long time, 25 years or so. I'll tell a quick story. When I first met you, you remember, I was 16 years old. I was on a parents' weekend at Tech visiting my brother, and I walked into a Sigma Nu house party.
Yeah.
I think my parents dropped me off. I'm not sure.
That's fantastic.
I think the statute of limitations has gone far enough that they're probably out of the woods there. But I walked in, and you were, I think, on a counter, maybe on a stove.
Oh, this is great. We're just putting it out there. Sure.
Pot banging.
I was the wild one.
That guy is a guy who's going somewhere. So look at me. Say, great judge of character.
I appreciate that.
We are, but it was, I've known you a long time and kept up with you, been an investor in Boulder. And so we, Lance and I were, we've been working with a group for about 7 years who has their own fund.
Yeah.
We've been kind of finding deals for them. It's been a great 7-year run. And as we've noticed is as we've kind of made them more and more money.
Sure.
And deals have become, been plentiful for the most part. But as growing in wealth and age and responsibilities, they're getting more and more picky. And
got it.
We're pitching deals that we feel like, man, somebody needs to get this. And we thought, what if we did our own fund? And it was kind of came out of the blue. And I said, man, I know a guy to talk to. So I called you, Paul. And then we, here we are kind of at the very genesis of us just kind of thinking the idea of like, it sounds impossible. And that's kind of the thing I've learned about life through the years is like, sometimes you just think things, you can't do them.
Yeah.
And then maybe look into them and certain things you thought are going to be easy are going to be hard. Certain things you thought are impossible or easier than you thought.
Yeah.
So I want to reach out to you and get your opinion on kind of how we go forward from here.
Yeah, it makes perfect sense. One of my favorite quotes of all time. I use it on this podcast all the time. Whether you think you can or you think you can't, you're right.
Sure.
That's Henry Ford.
Yeah.
And so it's right. If you go into this raising money mindset of this is too hard, I can't do this, you've set yourself up to fail before you've even started. Because one thing I always like to think about, every business around started somewhere. Even the biggest ones.
Sure.
I mean, Walmart's, Amazon's, they all just started with one person with an idea. So it just, you have to come up with a plan, get after it, and believe that you can, first and foremost. So, I mean, the fact that y'all are here, that you're talking about it is a great first step. Yeah, and I think your use case of you have experienced 7 years doing these types of deals, and now the group you've been working with is bigger, maybe more mature than some of the deals that you've got coming. It makes perfect sense.
Sure.
Like, start this second one with y'all leading it. And I think that's a great idea. So let's dive in. We got to talk about raising money. What we'll do today is we're going to talk more about the art of raising money. We're going to talk about how it works, how to get after money, how to do a pitch deck, how to present to people, what you're going to go through from investors and the ups and downs of that. We're going to talk about the art of it. When it comes to the science, like the technical, here's the exact numbers, here's the filings you have to do, that's going to be an attorney that's going to guide you on that. I have an amazing attorney for that I'll introduce you to. His name is Brett Sankis, sankislaw.com. It's a plug for him because he's phenomenal. He did it all for us for Boulder. We'll probably bring him on a podcast with you if you want. But so that's just a disclaimer for those listening, is like, we're not going to get into all the technical specs because they change. An attorney really needs to do that. But the art of raising money, candidly, is really what success lives and breathes by. Anybody can hire an attorney. Anybody can kind of work through the logistical steps of raising money. But the success of raising money really comes down to the grind. I shared this with y'all before we went on air. But for Boulder, we have about 55 investors, of which you're one of them. I must have reached out to, not full pitched, but reached out to over 1,000 people. Everybody that I ever interacted with at some point I reached out to. And you just have to head into raising money and understand you're going to get no 10 times more than you're going to get a yes. So that's the headline of what we're going to talk about today.
Now, when you reached out, did you reach out? Oh, this is phone calls, emails, all the above?
Yeah, so it was definitely all the above. But you want to work through almost a level of like comfort for yourself first. Start with your closest friends and family that you know might have an interest and might have the financial ability to do it, right? You never know anyone's personal financial situation that well, but you can usually get a pretty good handle on like who may be able to invest. And it's just a conversation with your closest friends and family first. Like any investor out there is going to want to see that you are invested in it yourself, either financially, or if you can't invest it yourself financially, you're all in time-wise, right? Because some people raising money as the entrepreneur don't have the financial means to put their own money into it, and others do. But an investor is going to want to see you're committed more than they are, right? Nobody wants to put $100,000 into something that somebody else didn't put any money into and is not really spending any of their time on. It's just kind of like a little side thing. Like, why would I put this much into it if you're not putting that much into it? So they're going to always want to see that you are as all in as you can be for what they're investing in. And so that's where I'll talk about my personal experience, right? Like we put our own financial money into it first. We were the first dollars in. And when we used that, then we went to raise money. And I started with my closest friends, closest family. We did kind of a smaller step stool of a raise. And then before I raised a single dollar from someone else, even friends or family, I was all in full time. I quit my job. So it gave the investors an understanding of, okay, they've got financial investment of their own, and now he's all in on his work. That gives them confidence. So I think that's key, is showing your commitment, which your experience in and of itself is huge, having done this for 7 years, which I didn't have that, right? I was starting a business that I had not done before.
And no one had done before.
Yeah, exactly. It's totally unique and different. Exactly. So that's always harder, but which is why me being all in more was even that much more important. But in y'all's case, you've got the experience, you've got the knowledge, the whereabouts, the deal flow is already coming to you. Like those are huge advantages that we're going to want to help you share the story of when it comes to reaching out to people. But to come back to the point, and then I'll pause, start with the more likely successes instead of trying to hit the home runs right out of the gate. Like start with the people you can have a dinner with and just talk openly and get their feedback, get their questions. They're gonna ask you good questions that feed into other things. And you're gonna get a lot of no's. And you're gonna get no's from people that you thought were gonna be yeses. Don't take offense to it. You don't know anyone's financial situation. You don't know what they're going through. You don't know where they're at personally at that time. You don't know where they're at professionally at that time. But every meeting is valuable because you're gonna have more and more chances to talk about it, get questions, etc. So expect to bat about less than 100, probably even less than that. I mean, you're probably gonna have to pitch. In my case, I had to pitch 1,000 for 55. I don't know the math right off the top of my head, but you get the point. It's hard.
I know we haven't talked for 7 years and haven't seen a Christmas card, but I need money.
Yeah.
So it's going to be some of those type of conversations.
That's absolutely right. That is the awkward part of some people you're reaching out to that you haven't connected with. And I think that's where it's just like, hey, this is something I think you'd be interested in. Because you also you have to believe yourself, which I fully did and still do, that this is an opportunity. And I know y'all's success you've had in the prior 7 years, that when you reach out to people, like you should feel confident, like, hey, I'm giving you a chance, which there's no obligation. You always make sure you're clear with people. Like, I'm not putting you in a difficult spot. I don't want you to feel obligated, but like we believe in this so much that we do want to bring it to you and see if you have an interest.
And I know we do. So that's going to be the easier part. Is the artistic side of this. It actually gets me excited.
Good.
It's the other stuff that kind of scares me more than anything, which I know is a past year, and maybe another time with the attorney, I think we get into some of that stuff. But
let's talk a little bit about it. What scares you the most?
It's just that's not. I think I'm more. Is it left brain, right brain? More artistic side. I enjoy the pitch. Okay. The other stuff, I almost need a secretary for. I need somebody else to almost 100%. Handle that kind of stuff, because I can't. I think once I get into it, I'm more familiar with Jake. Oh, it's true. It's true. Dude, look at her too. Here.
Yeah. Well, the benefit of y'all too is there's two of you, and you're going to be able to know who's better at what. And divide and conquer. And you're going to bring a team in. Like there is going to be an attorney involved. There just has to be at this level. And so that's where I would say play to your strengths. It's anything in business. A lot of times we focus in business on our weaknesses. I got to get better at this. I need to get coaching on that. Play to your strengths. I just watched the movie yesterday, The Amateur. Have you seen it?
I haven't seen it.
Awesome movie.
Never heard of it.
What's it about?
Brand new, just came out. It's about a guy, and I don't want to be a spoiler alert, but and this happens in the early part of the movie, but his wife gets killed. It's like a conspiracy, and he works for the CIA, and he's a computer guy.
I think I've seen. This is new.
It's brand new.
Yeah.
He's a computer guy, and like he is unbelievable on the computer, and he tries to get trained on the physical art of like being a CIA like operative, like Born Identity kind of guy, and that's so not his strength that he eventually realizes that, and he goes after the bad guys with his strengths, not the Born Identity like beat him up kind of guy. And he obviously it's
the guy who played Freddie Mercury.
Exactly.
That guy?
I forget his name. Yeah. Amazing actor. Great movie. Point being, play to your strengths. And when you have two people, y'all each have different strengths, and then you're going to bring an attorney in that handles all the stuff that you're not good at. That's the key.
Well, we're talking movies.
Yeah. I love movies.
My wife and I were out and had a kind of a night to ourselves. It was pretty rare.
Of course.
And we ended up at the movies. We saw Sinners. Michael B. Jordan.
Okay.
I didn't know anything about it going in. I just knew Michael B. Jordan was in it. I liked Creed. Creed's a great movie. So we saw it.
He's a great actor.
Nothing about it. Have you heard about this movie, Sinners?
I've seen the poster, but that's it.
That's all we'd seen. So we went in there, and it's a 1920s kind of. They come back from Chicago, and they're come back to a rural South and kind of start a business. I didn't know anything about it. Like halfway through, it turns into a vampire movie. Which you don't know it going in. It's like it makes it even better. So I kind of hate spoiling it.
There you go.
But if you watch the trailer, you definitely see
probably know that.
I had not seen even the trailer, and to view it in that, it was awesome. It was a great movie. I probably wouldn't even seen it.
Yeah.
I probably wouldn't even go see a vampire movie with Michael B. Jordan. I don't know. That's not something I'd go see. And it was a great movie. So,
that's awesome. I love finding movies and not watching the trailer. And
sure.
Like, what am I going to get? I don't know. Yeah. So that's, I guess, the advice I'd give you is you're going to be scared about some things. You're going to be hesitant about some things. Like, number one, believe that you can. And number two, play to your strengths and fill in the gaps with, your team, with people that you can hire onto the role. I mean, we don't know the exact money y'all are raising. I don't think we're getting to that level of specifics today, but knowing that it is sizable amounts for real estate deals, you're going to want to put the team in place to handle the things that you're not good at and don't know.
You're starting off with the people you know and the people that you think are your closest wins.
Yep.
Because you had never done this before, correct? So this is your first.
Yeah.
That's amazing. This is his very first time he built this.
Oh yeah, it was tough.
Okay. So, but you didn't. How did you learn to do it? Did you have someone that told you? Did you have a mentor as well? Did you even, because we have tons of data, but how to package that data and present it even to our closest and best wins is where I don't know.
In a way, I didn't have a mentor on the art of raising money. Like I created the pitch deck. I kind of helped figure out how I wanted the deal to work, because the other thing you got to figure out with the attorneys is like, what's the offer to the investors? What percentage do they get? What's your valuation, or how do the distributions going to work? Like all that has to be figured out. So that is where the attorney helped me. We kind of worked through different options. I guess I did get mentored in a few different ways. One of the people I got introduced to very early on is a CFO of a private equity company. He was probably the second person in on the Boulder deal, and he put a small amount in, but based on him investing, I was able to say, I think I'm going to structure it like this. What do you think?
Did he force you to do a podcast with him?
No, I haven't even brought him on the podcast yet. No, it was all behind the scenes. Yeah, we kind of put you on the spot here, Jake, didn't we?
Okay.
I didn't force. I invited you to the podcast.
I thought we could joke in here.
Bring it, baby. But he was awesome. So you're going to want, and that's probably the role I can play for you of like, okay, how can deals work? What might be attractive to investors or not. And honestly, that's where your 7 years of experience are probably going to help you quite a bit too.
Yeah, sure.
So I had a mentor there to kind of help me think of the flow and the structure for investors' perspective financially. And then what we also had was we did a feasibility study on the business where I hired someone with industry experience to look at, okay, the revenue model, the offering, the location, the population, all of that, they ran a full analysis that gave me something to present to investors from a pro forma, which is kind of your projections, right? That had some credibility to it. It wasn't just me making up numbers that I thought would look good. It was based on an industry expert putting a plan together. And so those, I guess, were the two mentors I had. One was, how can I present something to investors that's attractive to investors of that level that are used to seeing pitches like this? And so the CFO of the private equity company, his name's Willie, he helped me a lot on that. And then having a pro forma, the projections based on some level of experience, those two things gave me some level of credibility for something I hadn't done before. And then taking that, creating the pitch deck in PowerPoint, like that was just something I'd done many times, creating business decks. And so that was just create slides, make it look good, tell a story. Storytelling is key. When you're raising money, when you're doing anything, having a story with it that people can connect to is powerful. And so my pitch deck was, if I recall, I'm kind of going off the top of my head here, the first third of it was telling the story. How to come up with the idea, how did we design the park, what's the park going to look like, feel like, get people kind of excited about the what. Then we went into the projections in the pro forma of here's how we think it's going to make money, and here's the revenue, and here's the different options. And then we closed it with here's how that turns into an investment opportunity for you. So having kind of a strategy with your pitch deck is key.
Yeah, I think your theme of your pitch deck was all in.
Oh yeah,
that was really it. You were all in as you could be, and it just came across as authentic, which it was, and that makes it easier to be authentic when you are being authentic.
Yeah.
But that I didn't need to get to the numbers.
Yeah.
Because I was investing in the guy. You know what I mean? And that's something I would do every time.
I love that.
I think that's more important than the numbers. But so I was sold kind of before that first part. I was probably in. So I think that's so true. Now we're going to be on this side of it. That you got to have people hooked a little before you get into even the numbers of it, which is
or risk, right?
100%.
So I think that's where I really screw up on certain things, because even on some of the deals we've pitched now and currently, I don't think I'm telling the story good enough.
Yep.
Because I'm all data. Because in my mind, I just show, dude, look I have hundreds. Any question you can ask, I can answer it with data.
And intensely.
And probably too, well, everyone likes Adderall, right? And so
here's the numbers.
When prescribed.
Of course. And so I do get probably caught up in the weeds with like overwhelming them with data.
Yep.
And then when I'm asked about risk, because I feel like you have so much data, I can be 100% honest with the risk, but I think it's maybe too honest in a sense. Not that you don't want to be honest about the risk, but I don't think how I weave that into the story, I think it comes off as like this is very risky when it's really not. Does that make sense?
I
don't think I'm properly,
more risky than it is.
That's what,
Yeah, well, and that's not a bad thing. Like, let's be real clear about that. Like, everybody needs to understand the risk, but I think what you're saying is it's all about what level of detail do you need to give to the investors. Part of the technical side, which we won't go as much into, you're only allowed to pitch accredited investors. There is some rules as far as number of non-accredited investors you can get, things like that. But again, we're getting into the attorney stuff now. But you're going to only want to pitch people that can understand the risk inherently, and then your job is to educate them on the risk of this specific opportunity based on the level of info that they need. I guess is the way I'm dancing around this a little bit, because I don't ever want someone to not understand the risk of an investment. But you can overwhelm people that they don't need the info. Like Jake just said, and let's use Jake's comment, that when it came to investing in Boulder, he didn't care as much about the numbers. He was investing in the vision. In me, as he said, and I think you're going to find that's way more common than you think.
In Epic, I was a big Epic believer. I love the whole development.
Oh, absolutely, that's where we are right now.
Exactly. So it was a lot going for you. I mean, the city of Grand Prairie had invested in you. It was just a lot. Some of that's more technical. Some of that is more financial. That had me more comfortable. But it was kind of all of it together.
Yes, the package.
Correct.
Yeah. Because to this day, a lot of people still tell me, like, I invested in you. I invested in, this being Boulder. They want the returns, of course, but they also understand, like, there's risk to it. And so don't underestimate the power of the story, and don't underestimate the power of people are going to invest in you guys, in you, and they're going to trust that you know what you're doing and you know how to get after it. They do need to understand the risk, but that shouldn't be the only conversation.
Yeah.
I think if like my pitch deck had those 3 parts, the story, the opportunity, and then the investment, make sure you come up with what those 3 points are. Usually 3 is usually a good number to present things, and just make sure it's not all data, because people's eyes will glaze over.
I've seen it.
And they more want to connect to you.
Story, that's the one thing that we really haven't. The story is the data.
Yeah.
And that's the problem.
Well, currently we have an in-house, we don't really have a story to tell as far as the way we're currently structured. It would be a little different on this venture that we'd have
I'll give you an example. I think you do. I don't know enough about what y'all are doing, and if I share too much, just let me know.
Sure.
But y'all have 7 years of experience.
Sure.
What I would do is pick one example of a profitable deal that you did and bring it to life.
Oh, sure.
Like, don't just show me the numbers.
Yeah.
Show me some photos. Show me some ups and downs. People don't want to I don't think investors always want to invest in something that's going to be a straight line, an escalator going up. But the reality is it's a valley of ups and downs. And so if you can tell a story of a deal that illustrates your experience, your knowledge, and then that story is sharing pictures, and here's how you got the opportunity, and here's where it went good, and here's where it went different than expected. They're tied into that story. And then you say, and here's how it played out, and here's the numbers, and then you can transition into the numbers. That way they're really connected to whatever that particular deal was.
Sure.
And then you say, look, that deal's done, but we have other deals similar to it that we're seeing that could yield similar results.
Sure.
How did you handle timing of it all?
Yep.
I guess I'm sure the analyst helped you pick a time frame, but in some of the deals we've done, we're pretty good with the projections.
Yep.
We've been doing it so long. If this is how this deal's most likely going to play out, this is
Yep.
what you're looking at for how much money everyone can make. The one thing that is tough for us to predict, and though I still would say we're good at it, is timing.
Oh, of course.
Because there's so much out of our control.
Yep.
How did you package that and deliver that to your investors?
Yeah, mine was similar. A couple things. One, I think you got to be upfront about that the return timeline is a projection, and it may go faster, may go slower. Everyone's going to understand that. But what I felt helped Boulder in our raise was we did it in tranches. So I was able to look and say, okay, if I need $7 million raised, I really only need $500,000 for the next 6 to 9 months to be able to get the architectural plans going, to be able to get engineering going, to be able to get the attorney paid to raise the rest of the money, whatever it ends up being. And so I just went after that first $500,000, and I created different, not classes, but that's the easiest word to use, but different opportunities for investors. So those that invested very, very early on got a slightly enhanced opportunity because they came in very early on when there's more risk to the deal, right? And so I think I did it in 4 different tranches. The one was the very first dollars in, they got something extra. And then the next one was like the next $1 million was gonna get us this much further along in the project. They got a little bit more extra. And then it came to the third tranche, which was now we need to raise the rest of the money so that we can break ground and start and get the debt financing, right? And then the fourth phase was during construction, things went over, which happens, and we had to do an extra raise, right? And so I think the reality is, based on your experience, you've just got to look at how much you need, when you need it, and don't feel like if you have to raise, let's say $1 million, you may not need to raise $1 million all at the same time. Raise it in phases and reward those that come in the very first phase with a little extra, because there's the risk that you don't raise the rest of it and it poof goes to nothing. I mean, that's the reality of these kind of investments that the investors have to understand, but that's, I think, the key.
Do you have a pandemic plan when you started?
No, God, no. Yeah, that was awesome. So try raising money for an indoor family entertainment center when the world is shut down. There's some fun stories I can tell you about that.
Everything going up. It was tough.
It was very tough. Yeah, I remember I wanted to break ground in June of 2019. I quit my job in May of 2019. I was like, oh, we'll break ground in a couple months. We broke ground 2 years later. It took 2 years just to even break ground. I thought it was going to take 2 months. And it took 5 years from the first idea to opening day. It takes time.
When in these tranches, you mentioned earlier, I don't remember if we were recording it, but you mentioned you probably pitched 1,000 people to get 55.
Yeah, not pitched, but reached out to. A lot of them just don't respond.
I don't even know 1,000 people.
Yeah.
So how did you know 1,000 people,
no,
or how did you get these other people?
I called it the spider web. So one person that knows 4 or 5, and then that 4 or 5 might know 4 or 5 others. So you just have to try to get the meetings with who you can, and then you kind of close it with like, do you know of anyone else that might be interested in this?
Okay.
And ask them genuinely. Like, don't put them on the spot. Like, you must give me 3 names before we leave, like a timeshare type thing. It's just like, hey, I'm trying to reach as many people as I can. Do you know anyone else that would be interested? And to raise money from an accredited investor, you do have to know them. Like, you can't. This is all getting into attorney stuff. You can't cold call. Okay. That's exactly right. Now, if you want to cold call, there's a different regulation that you would file under that has different rules and guidelines, and it basically comes down to what level of checking and confirmation has to be done to confirm they're an accredited investor. Like, if you know the people and you have, and again, I'm getting into attorney stuff, so let me disclaim that this is not advice. This is more just my understanding of it. The attorney will tell you for sure. But if you're cold calling and just reaching out to anybody, you would have to validate that they are an accredited investor. They have to either submit a bank statement or an income, W-2, whatever it is, to a third party who can validate it. That's if you're just going to anybody in the world. If you know people, like I knew Jake, I knew his experience, I knew his, education background, that I had good reason to understand he was an accredited investor. So he then has to check the box that says, I am an accredited investor because I know these requirements, and I have good reason to believe that because I know him. I was under that process. And so I guess it all depends how you're reaching out to people. If you do start going into just like, hey, this is the first time we've ever met, good to meet you, you're going to have a different level of
even if
oversight.
Jake knows me, but if Jake knows me, who I've never met you, because he knows me and says, hey, you ought to hear this, does that...
I think that's where I want Brett, the attorney, to kind of help us on that side of it. But the bottom line is, like, when I say I reached out to 1,000 people, like, go look at your social media and add up how many people you're connected to on Facebook, how many people you're connected to on LinkedIn, you're going to see it's a lot of people. And to Jake's point earlier, it might be someone you haven't talked to in 4 or 5 years and kept up with as much. But the reality is, like, they still know you, you still know them, you just haven't,
And you're presenting them an opportunity.
Well, that's exactly
right. And I think we both believe this is truly an opportunity.
Absolutely.
This is worth your time.
Absolutely 100%. Right.
And you got to believe that, or
that's right.
You're not doing anything
that's right.
worth anything.
Yeah. So. And then the last thing I'll say on the legal side of it, let the attorney guide you.
Okay.
It's just that simple. They know what they're doing. They know who you can present to, who you can't, what you need to do. That will take care of itself. You'll get comfortable with that pretty easy.
I remember the accredited investor document because it's like a 6-page document. You sign at the bottom of every page, or at least initial.
Oh, yeah, sure.
And every page goes, this is probably going to lose money.
Absolutely.
Next page, like, most of these things lose money.
That's right.
And it's like, it's almost talking you out of it. It's like
that's what's supposed
are you sure?
Correct.
This is super risky.
That's
you better know.
That's right.
And then you sign it again.
That's right.
So
that's why you, as the person raising the money, need those documents. They're to protect you and the investor to say, this is risky. Yeah. And, that is the reality of it. To Lance's point earlier, when he's educating on the risk, that you should never hide the risk. And those documents definitely paint the dirty picture, but they need to.
So you never had, so when you were doing raising money, it wasn't, this is just in my head because I've never done this. This wasn't, I've put it out on a calendar, or I've told people, hey, on the 5th, come meet me, and I'm in a conference room. Was it? So did you know everyone that was coming in, or could?
Yeah, I did.
Okay, so you couldn't have just put on Facebook, hey.
If you can,
Boulder,
yes,
you have to have the different filing.
That's correct. Okay. There's a certain filing for what they call public advertising of the offer. Okay. If you're going to publicly advertise it, you just have to file it under a different regulation, and you're going to have more stringent requirements on validating who the investors are.
Understood.
So that Joey doesn't walk by your pitch meeting and want free dinner and then get suckered into investing his entire life savings of $5,000 into your deal, and he loses it and it puts him on, like, right? Like, that's, if you're going to the public in an advertising type position, you're going to have more stringent requirements. Okay. Whereas we did one meeting, it was actually here at the Epic, where we got all the investors together that were considering it. And I did a presentation. We went around to the sites, but it was all people I knew that had already been given the opportunity. And this was just a forum for them to come together. But yeah, it really comes down to more, how are you putting the deal out there? Is it truly private and known people? That's one set of requirements, versus is it just, hey, I posted this on, like, I never posted and couldn't post the deal on Facebook or Instagram or LinkedIn because I wasn't under that reg.
Speaking of your spider web, so I think, you you certainly do. I actually went to 4 of my buddies when we were looking to invest, and it was funny because me and these 5 guys wanted to, before Boulder, we all wanted to get in business together. We all would have meetings. What can we do? We were going to do an amusement park type. We were going to do Top Golf for baseball.
I remember that.
And we were going to, who was going to quit their job was the thing.
Who's all in?
We had the meetings. We'd gone to Boston and looked at the hit tracks and how we could do it in a way. And so we'd done all the, except no one was willing to really do it. You know what I mean? To really do it, we're going to have to kind of have a meeting like that. It just kind of fell apart, and life started getting real, and people started having kids, and it just didn't happen for us. So when your pitch came to me, that's what I thought, man, it'd be fun, and that's how I pitched to them.
I love it.
On behalf of you, it's like, dude, it'd be fun to watch someone else do what we talked about doing. And that's
get a front row seat.
So that got 4 more people interested in your story, and then once you see the pitch, it was they were kind of sold as well. So
I love it.
That's kind of stuff that can happen as well. Is your people you pitch to others.
Yep. And your story there of, you had a really good business idea that 4 or 5 of your friends were really into, but nobody was willing to put everything on it, is exactly why you need to show that to investors that you are all in. Because imagine if you guys had went and raised $100,000 for that idea, but none of y'all went all in. Whoever put that $100,000 in would have had everything to risk, and nobody else kind of all in with it. And so that's where, once you can show, hey, this is our experience, this is how we're all in, this is what we're doing for it, investors are going to come behind it a lot easier. Because if
I still think it would work.
I agree. There's one of them in Austin.
I know. We were following that one.
I bet you are. It's never too late. It's never too late.
Sure. We'll see. Still not willing to quit my job. So.
There you go. Yep, exactly. All right. Good chat so far. Any other questions or stories we want to talk about?
So when you were, you mentioned earlier that you had put, and I don't know how much you can share here, but when you had already shown investors, hey, this is how much of my own money I have in. What correlation was that? Because, for instance, if you say, hey, I have $100 in, I think you're more likely to get $100 from people.
Yeah. Exactly.
Versus, hey, I've got $5 in. Can you give me 100?
Yeah.
Did the attorneys ever tell you, or did anyone ever recommend a certain number or a certain ratio of, if you were going to put in this, you can more than likely expect this?
Good question. I think what you outlined, a lot of investors do inherently think about, like, okay, if you put $50,000 in, I'll put $50,000 in. But towards the end of the pitching, it didn't matter as much of what I put in. I put in a significant amount, but I put in as much as I could. But in my case, my quitting my job was an exponentially bigger number than you could quantify, because I was making at the time $250,000, $300,000 a year, and that went to zero for 2.5 years. I mean, $300,000 for 2.5 years, that's almost $1 million of lost income that I can't show on the cap table that I invested, but you bet that was an investment, right? I mean, I went 2.5 years with, almost 3 years actually, with zero compared to what I was making. And so I think you just don't feel like, oh, I must do this dollar amount because that's what I want to ask others for. Everybody's in a different financial situation. Everyone's going to make decisions based on different things. You have to do what's right for you. But my point is, as long as you can help the investors feel confident that they're not going to invest in something that you're going to change your mind on or just walk away from if it gets hard, is what they're really looking for.
And I think we have a track record of deals that I think is very
data is not a problem.
That's going to help y'all a lot. Yeah. That's a big difference of mine was, hey, this is a vision, it's a future.
Yeah. Probably the toughest pitch.
Oh, it was definitely tough.
Probably the toughest pitch.
Whereas y'all have done this, you're doing this is your job, you're good at it, it's worked. I think in y'all's case, you just need the help figuring out the structure of how to raise money, the logistical side of it, and then creating the story and getting in front of enough people.
When was Boulder in your mind first?
Oh, it was
2017? Was it 2018?
It was November of 2017.
Goodness gracious.
Was the first idea.
It's amazing how entertainment has blown up since.
My gosh.
Growing up in this area, there was nothing to do. Go to the movies or go out to eat. That was about it. And Six Flags.
Yep, that's it.
Now it's like
something everywhere.
Every year.
Correct. And that's what's making the business tough.
Yeah, it is. I imagine so, but it's just amazing how much there is to do.
100%.
But there just wasn't.
Yep.
Not a couple decades ago.
Totally.
So it's wild.
Yeah. Continues to
How
grow.
long when you if not including the money you put in, just strictly investor money, how long did it take for you had enough where you could you have started? I'm sure you could have started with the money that you and your family put in, but that money aside, how long would it have taken to even get going based on the time you put in to raise money?
That's where, it was perfect. That was my first tranche, right? Like the first phase of non-personal money was what got the ball going. And that was, I said 500,000 earlier. I think it was 300,000 is what really got us going. And that came from all very close friends and family that had heard about the idea and the thoughts before it came time. And they were candidly investing in me. In the idea that not so much the deal, right? Because the deal was very unformed at that point. So that's where I think you're going to go to you're not easy, there's never an easy win, but your most likely wins. And you really do want to think about how much money do I need to make the next meaningful step? Because each meaningful step you make makes the deal more credible for future investors that may not have as much comfort with you, right? Like your closest friends and family are going to invest in you guys. And then obviously they're going to want to know about the deal. But once you make meaningful progress, you're going to be able to raise more money. Then you're going to make a next meaningful, because usually these kind of businesses and these deals aren't just a one huge lump sum, make it all the way. You got to stair step it.
But was this it
took me about probably 2 to 3 months.
2 to 3 months.
How much was raised in total?
7 million.
That's a lot.
Yeah. It was a lot.
Yeah, sure.
Yeah, it was. It took a lot of time. I think raising money alone of the 5 years from first idea to opening day of 5 years, raising money was 3.5 years.
That was back when 7 million was a lot.
It still is, but and it went through COVID. I went 6 months without even a single pitch. I couldn't even get somebody on the phone. And that was, I told this story before, and I guess I'll tell it again. Like the guy that I was working with as our feasibility consultant, when COVID hit, he was like, "Look, you have a choice. You've already raised some money. You've got money in the bank to keep making progress. You can keep making progress, or you can stop and wait and see what happens." He goes, "My advice is keep making progress. That's what people invested for you to do. This is not going to end the world. It's just changing things, but keep making progress. Keep working on architectural plans. Keep working on engineering plans, because when we come out of this, you'll be further ahead where you can raise more money. You'll have made a more meaningful step." And it was great advice because candidly at that time I was scared.
Sure.
I was like, I just need to protect this money. Don't do anything. No, they gave, and I had conversations with everyone that had invested. Like, we're going to keep going. Do you agree or disagree? Right. And the analogy is the movie Days of Thunder, old movie.
Oh, goodness.
I've seen it, but I can't remember.
You're going to watch it again.
My favorite movie of all time.
Okay, so now we're talking.
I should have known that.
Cole was in a wreck. Cole Trickle was the guy. He was in a wreck and he had a bad experience. And then he gets back on the race course for the first time and there's a wreck in front of him with smoke. He can't see. And his guy in his ear says, "You got to just drive through it, Cole. Just drive through it. You don't know where the future holds." And he guns it through it, and you see all these cars.
I'm out of here, Harry.
Exactly. And he drives through it, and he came out the other side. And that was the advice that was given. It was like, you're going to come upon hard times. Just keep going. Believe that you can. It comes back to what we said earlier. And
is this a movie podcast?
I guess it is. I'm a movie fan.
I love movies.
It's how I kind of get my mental health is just disappear into a movie.
Sure,
it helps me. Yeah.
Don't have the time anymore, but I would like to. I'd like to.
Yeah, I'm with
That's
you
what I
on
liked
that.
about going to the movies the other night.
Yes.
Don't ever do it, but I watched that movie like I hadn't watched a movie in a long time. Because at home, you just can't.
So many distractions.
Just can't really get into it. And it was like an IMAX, like camera. It was just
absolutely.
Go see Sinners. Go see it.
Okay. Good plug.
Yep.
Not to take us off that.
Yeah, let's get back to the real topic at hand.
Because I do want to go see that now.
I'm an art brain.
That's right.
With how excited you are on that. But so then you get this money, right?
Yep.
Do you then, because one thing that I know going to have an issue with is, you knew, okay, this is what it's going to cost to build. This is what it's going to cost to get going. We don't necessarily know exactly what certain deals are going to cost.
Of course.
So we're just trying to raise a pool of money, because the more money we have, the more properties we can buy.
Perfect. Yep. You're doing more of a fund than an exact business pitch.
Very different than what.
Exactly right.
Yeah.
And so, but even with the money you got, did you then go and use that money to talk to a bank? Or was it only the money you... Okay.
Yeah, so the bank wouldn't talk to us until the equity was in first.
Okay, did they tell you how much you needed for the... Okay.
Yeah, so you're going to need a budget. And so to your point, you're not going to know your exact budget, but come up with what you think a good budget would be. And then let's say, the bank, when you meet with them, you're going to talk through your experience and all of that. And they'll give you a feel for like, okay, I think you probably are going to be able to finance 60-40. Like in our case, it was roughly 60% debt, 40% equity. And so I'll just make numbers simple, right? Like if you have a $10 million need, which is massive. And sorry, we're talking about such big numbers on this podcast. I know a lot of people raising money for entrepreneurship isn't this large, but if you need $10 million and the bank is giving you indication, bank will not give you a commitment until way later in the game. But you kind of want to know what your debt to equity structure needs to be. Ours was 60-40. And then that's where you build your targets on, and equity has to come first. The bank won't even talk to you until the equity's in play.
Okay. Yeah, I had no idea.
Yeah. No, that's a great question. That. Most people want to go to the bank first.
Yeah.
And the bank get pitched all the time, and until there's equity money behind it, they're not interested. Yeah. So the key is just knocking on as many equity doors as you can, and then same when it comes to debt, you got to go and knock on a lot of doors and find what bank is interested in lending in that area at that time. Because you might find one bank that's interested in doing a deal in your real estate space 1 month, and then 9 months later, their portfolio has changed and they need to do a deal in something else. And so, again, just like equity.
Or vice versa.
Vice versa, exactly right. Like, don't take no personally. It's probably the best advice I can give you, whether it's debt or equity, is you're going to get turned down more than you did when you were dating.
He told you about our 7 no's, right?
Yeah, the seven.
Well, they were our best. They were I thought our best odds too.
Oh, okay.
So they count maybe more than 7.
Yeah, they sting a little more.
Yeah, sure.
But don't let them get you down.
Yeah.
Because just tell yourself, I don't know their situation, right? They might be having some tough times. They might have other opportunities. Like, don't take it personally.
And success breeds success. I mean, once you get one win, it's easier to go back, and
that's
easier
exactly
and easier. So these first ones are going to be the most difficult and going to take the most persistence and the most belief.
Well, and early on too, don't, in my opinion, this is just an opinion, don't be too firm with a minimum required investment. Like a lot of people will be like, it's $100,000 minimum, nothing else. I mean, I would take anything. I had $2,500. Like it adds up, because if you can get 4 people that do $2,500, that's $10,000, and then you get 4 of those, and you got $40,000. It's just like, that's why we have 55 investors. Would I have loved to have had a one-stop shop? Of course, but within reason. You know your deal. You know what you're looking for. But I was not firm and difficult on minimums. I just. If they said yes, I'd say yes to whatever they were comfortable with. Because in the end, it's their money and they know what they're comfortable risking. And that was what I would be comfortable accepting. So I was very flexible on that.
And then obviously did you say, maybe you mentioned it earlier, did you hire someone to monitor the books, or is that something you're doing yourself?
That's my background. I was a CPA before. Okay. We now have a accountant that does all the books for Boulder, but when we were raising money, that was all you. That was me, yeah. Okay. Because that was one of my strengths, right? Play to your strengths. That was one of my strengths, was understanding the budgets and the financials and the pro forma. I did all the pro formas myself. I ran all the spreadsheets myself. But if that's not your strength, you can hire people to do that pretty easy.
Yeah.
But yeah, it was one of my strengths, so that's what I was able to keep in house.
Play to your strength.
Exactly. Always play to your strength. In school and all that, we're always taught fix your weaknesses. And I think in real world, focus on your strengths, you're going to get so much further.
Sure.
And it's what you enjoy doing anyways. To summarize the art, prepare for a lot of no's. Don't get your head down. Believe that you can do it. Y'all's experience is phenomenal. And play to your strengths, and you'll get there.
Sure. The story, starting with the story, is very helpful to me.
I'm glad you took that.
That's
Yeah.
We don't do that.
And I can help you with that.
I don't do that very well.
That's one of my strengths, is designing a presentation to help it connect to somebody.
Yep.
Because if you just throw numbers at them, you'll get a few people that are very, very, very numbers driven, but most people want to invest in something that they're tied to, they're interested in, they can understand. And so, I think in y'all's case, we can put a really cool story together.
They can tell their wife or husband about.
Yeah, that's a really good way to say it, Jake. Actually, it is, because they should be able to leave your pitch meeting and go sit down with their significant other and explain it in a way that they're excited about.
Sure.
That's a really good.
I'm handing them 20-page book reports that I'm losing them after page 2.
There you go. Yeah, I'd be happy to.
I appreciate the time.
Y'all put things together if you want to run it by me and get some ideas.
Awesome.
The art of it is so important.
Can't wait for part 2.
All right, let's do it. Awesome. Thanks for joining, guys.
Okay.